This is the FFR Trading Market Minute, and again, a daily candlestick chart of the SPY, the ETF for the S&P 500. And well, we got the 50 basis point rate cut from the Fed yesterday. The market was overjoyed, even though it did end up, had some profit taking into the close there yesterday. We have an outside gap up today. That's usually a trend type day where the market will kind of trend higher from the day. It did pull back to yesterday's high and found support there and has rallied back up here. I'm always concerned, as the market has made a new all-time high again. And I had talked about in a previous video, a lot of times institutions will let the market break out above a previous high like that, especially this being a prior all-time high, and kind of give the breakout buyers there enough rope to kind of hang themselves, and they'll come in and reverse the market at that point. Once that high has been taken out, they'll give it a little room, and then they'll come in and knock things back down here. And the reason I'm thinking that could be a possibility among all the exuberance here is we have a higher high in price here, but right now we've got a lower high in the oscillator. That is bearish divergence, and that could just like we saw back here. So we had market was moving higher here, the RSI or oscillator here was moving lower. Same thing, I think it was back in here where the price was moving higher, but the RSI was making lower highs. So, and you can see the result of each of those. We had pullbacks. This one was a pretty extreme pullback. This one was a little more normal pullback, filling some gap back here. So downside targets, if we do start pulling back here, we've got some support here, which was resistance. Now role reversal becomes support. And there's a small gap to fill below that, and then the 20-period moving average. That's, at the moment anyway, sitting around 557 and change. Now, having said that, if they are able tomorrow, possibly Monday, if they are able to take out whatever the high ends up being today, if they're able to take that high out because the RSI has crossed above its moving average here, it is making a lower high so far. But if it does take out the highs, then we may get some more follow through to the upside there. Right? So look for the break of whatever the high ends up being today, which is Thursday. After the close today, if they're able to take that high out, we may get another run and maybe up to that 576 level here, and then we'll watch and see, does the RSI follow? Is it making new highs as well, or is it still in a bearish divergence situation? Economic data set for next week. Monday we kick it off with S&P Global Manufacturing and Services PMI. GDP on Thursday, and Friday's core PCE. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.